Hey everybody, welcome to the Head Startup. On today's video, I want to talk about a stock that has taken a bit of a beating by the market in the last few months. The stock I am talking about is Ping Identity. So first off, who exactly are Ping Identity? Ping Identity are involved in the cybersecurity industry and they offer cloud-based security. Because organizations worldwide are accelerating their adoption of cloud-based platforms amid widespread digital transformation, there has been a huge increase in companies pumping their money into protecting themselves from cyber threats. When you think about it, nearly every time that we interact with a business these days, it is nearly always over the cloud. Be it online shopping or streaming, for example. And even in our jobs, how we interact with our colleagues and do our work has completely changed. It's become very common for people to work remotely these days and not even have met any of their colleagues in person. Because of this, it has become easier for cyber criminals to exploit individuals and businesses. For this reason, identity management has become vital. Systems need to be put in place to keep you secure when you're interacting with your colleagues and your company's cloud-based systems. And this type of business is essentially what Ping Identity specialise in. Ping's business is already well established and they work with over 60% of the Fortune 100 companies. Here is just a snapshot of some of the companies that you will recognise that they have struck deals with. That was just a quick overview of the company. Let's move on now to have a look at its recent financial performance and the share price and what analysts are thinking at the moment about the stock. And just before we go and look at the figures, I just want to put in a quick disclaimer. This is not financial advice whatsoever. If you are planning on investing, make sure and do some of your own research and get some proper advice. Investing can be a risky game if you're not careful. Just before we look at the figures, I just want to put one date in your calendar. The 5th of May is when the company is going to release its next earnings. So that will be for the first quarter of 2021. The expectation for Ping Identity sales for quarter one are around 63 million. So now let's have a look at some of their most recent financial results, which was for the year of 2020. The company's revenue for 2020 was 244 million and that was up from 243 million the year before. So there wasn't much of a change year on year. But revenue is expected to grow by 7.9% in 2021 and 12.9% in 2022. So how did it actually make this revenue? In 2020, 59% of the revenue actually came from subscriptions to their licenses and 33% came from SaaS support and maintenance. This is one thing I like about the company is that they are making their money from a subscription-based model, so this should lead to their revenues being quite steady in the future. One encouraging sign is the huge increase in recurring revenue from large customers. In 2020, 51 customers contributed 1 million or more to the company's revenue. This was up from 38 customers in 2019, which is an increase of 34%. And customers contributing over 250,000 was up to 260. This was up from 232 in the previous year, which is an increase of 12%. However, it has not been plain sailing for the company, as you will know by the share price being currently down at the moment, and this is because the company is in a loss-making position. So they made a loss of 11.5 million in 2020 and they made a loss in the prior year, I think it was 1.5 million. And these losses have caused the most concern for investors deciding whether to invest or not. And at the end of the day, investors need return on their investment and the company does not have any policy or any future intention to pay any dividends. One of the main reasons for this is the company has quite a high level of debt. At the end of 2020, it had about 150 million worth of debt on its balance sheet. And what comes with debt is a lot of covenants and restrictions about what the company can do. The company even lists this in its risks in its annual return. They cite this as a possible reason that could stunt the company's growth in the future. Another small cause for concern is that 47% of the company's common stock is owned by Vista Equity Partners. Vista owning 47% exercise a lot of control over the company, and they of course will have their own exit strategy at some point in the future, and you don't know when that is going to be, and they might end up dumping a lot of their stock at some time in the future, nobody knows, and this might have a downward pressure on the price of Ping. In terms of competitors, Ping Identity's biggest competitor is Okta, but Okta are far bigger in size. Okta have a valuation of about 32 billion at the moment, compared to Ping's only about 2 billion valuation. Right, let's just jump in and look at the price and see how it's been performing. So as you can see here, it's significantly down from its all-time highs there in mid-February. So in mid-February we had a price there of roughly $36, but now it's trading at roughly $24.72. So it's down about 20% over the last 2 months. But over the last week, it has started to pick up. It's up around 13% or so. I myself have got into a position on it. I bought 27 shares myself. I got in at the price of $21.99. So I'm up about 9.41% overall, which is 12% or so gain or loss with an FX impact of 2.5%. So my plan for this at the moment is to try and hold on to it. I think there could be a potential to get up to about a 30 or 40% return if things go well next week and the company gets its earnings back on track. But a lot is definitely going to hinge on next week's earning call, as previously when they missed their earnings before, the stock dropped 23% in a day. But in my own opinion, I can't see the stock being hit with another 20% decrease, even if they do miss their targets. But enough about what I think, let's have a look now at what the analysts actually think. So out of 18 analysts that were surveyed, 1 rated the stock as a sell, 5 rated it as a hold at the moment, 11 have assigned it a buy rating, and 1 has assigned it a strong buy rating. And if you average out all those ratings, it comes to a buy. And they also came up with a consensus price target, and that target is $34. So if the analysts do get this right and the price does go up to about $34, then we're looking at a return of about 36%. But again, a lot of this is going to hinge on what happens next week. So that's pretty much all I have for you today. I hope you enjoyed the video, and if you did, I would really appreciate it if you liked the video and subscribe to my channel for more content like this.